Today I would like to analyze HIMS, one of the largest telehealth companies in the world, and we can see here the stock price is down around 33% in not many days. So the reason for that is that Novo Nordisk cancelled the weight loss medication that they had a partnership with HIMS. So we can see here this has a big effect on the stock price. So we also asked ChatGPT how much of the revenue is this of HIMS. So we can see here it's calculated around 15 to 16% of the revenue of HIMS. So it has a big effect on the financials as well. So we're going to take a look at the financials to find out if it's a good buy right now. The first thing we can recognize is a market cap of 9.61 billion US dollar. This makes HIMS the second largest telehealth company in the world by the market cap. Now we're going to take a look at the financials. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business and not a declining business. So in 2020, the revenue was around 0.15 billion US dollar. This was an incredible growth, around 80% from 2019. In 2021, we saw the incredible growth again, around 82%. This is something we like to see. In 2022, we saw the even better growth, around 93%. And then in 2023, we saw the very strong growth, around 65%. And then in 2024, we saw the great growth, around 69%. So overall, this company had a very good growth in the last 5 years. So the check here, and we like to see that. The next thing we're looking for is the free cash flow growth in the last 5 years. The free cash flow is very important because it can be used to pay the dividend, to pay the stock buybacks, to invest in the business, and also to pay back the debt. So in 2020, the free cash flow was negative, around 4 million US dollar. In 2021, it was even worse, around 35 million negative. In 2022, we saw the better free cash flow, around 29 million negative. And then finally in 2023, we saw the positive free cash flow, around 56 million US dollar. And then in 2024, we saw the incredible growth, around 272%. So overall, we can say we had a good free cash flow growth in the last 5 years. So it's a check here as well. The next thing we're looking for is a free cash flow yield over 4%. So this can also tell us about the valuation of this company. The higher the free cash flow yield, the higher the indication for undervaluation. So in 2024, the free cash flow was around 0.21 billion US dollar. Then we got to divide it with the current market cap. This is around 9.61 billion US dollar. So then we're going to get the free cash flow yield for 2024. So the number we're going to get would be around 2.18%. So this free cash flow yield does look quite low at the moment, so it's not a check here, but we also can predict that this company can increase the free cash flow in the future as well. So we're going to calculate this number as well for 2027. If we ask ChatGPT, we can see here in 2025 the free cash flow could be around 0.2 billion US dollar, in 2026 around 0.26 billion US dollar, in 2027 around 0.34 billion US dollar. So let's assume for 2027, we have the 0.34 billion. Let's take around 20% away because they canceled the contract. So then we're going to get a different number for the free cash flow. This would be around 0.27 billion. So let's use this number, 0.27 billion. We're going to divide it with the current market cap, 9.61 billion. And then we're going to get a different free cash flow yield for 2027. So the number we're going to get would be around 2.80%. And that's again quite low. Actually, it would not be a check here. We want to see that number over 4%. But if this company can continue to grow the free cash flow, it could still be interesting. The next thing we're looking for is a debt to free cash flow ratio under 5. This means the company can repay the debt with a free cash flow in under 5 years. A very important number, because if a company has too much debt and cannot repay the debt, it can risk to go bankrupt. So first we're going to take a look at the long-term debt. We can see here around 9.4 million US dollar. Then we're also going to add the short-term debt. We can see here around 1.9 million US dollar. And then we're going to divide this number with the current free cash flow. So this is around 210 million US dollar. So the number we're going to get would be around 0.05. And that's a great number. It means in not many months we can repay the debt with a free cash flow. So this would be a check here. We like to see that. We can also take a look at the cash on hand, how much money this company has in the bank. We can see here around 300 million US dollar. This is a great amount. So overall, I think this company has a great balance sheet. The next thing we're looking for is the enterprise valuation to free cash flow ratio under 25. So this can also tell us about the valuation of this company. The lower the number gets, the higher the indication for undervaluation. So we want to see a low number here. First, we're going to calculate the enterprise valuation. This is the current market cap, 9,610 million US dollar. We're going to add the debt as well. So this is around 11.3 million US dollar. We're going to take minus the cash, 300 million, and then we're going to get the enterprise valuation, so how much the whole company is worth. So the number we're going to get would be around 9,321.3 million US dollar. So this number we're going to divide with the current free cash flow, 210 million, and then we're going to get the ratio that we're looking for. So the number we're going to get would be around 44.38. And that's quite high. It's over the 25 that we're looking for. So it's not a check here. It could be an indication for overvaluation. But of course, we expect the free cash flow to grow as well. So then as for the 2027 with the assumptions around 270 million, we're going to get a different number. So the number we're going to get for 2027 would be around 34.52. And that would look already better in my opinion, still not under the 25, so it could be an indication for overvaluation as well. But overall, if this company can continue to grow the free cash flow, it could be an interesting investment. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. We like to see that, especially if we think the company is undervalued. So we can see here this company has an increasing shares outstanding. So it means they put more shares on the stock market to get the higher financials. So this is quite normal for the younger companies because they need a lot of financials to grow the business. But of course, at some point we want to see the shares outstanding decrease. So it's not a check here. Can HIMS stock be a good buy right now? The stock price is down around 33% in not many days because Novo Nordisk cancelled the contract with them. So let's start with a positive about this company. They had a great revenue growth in the last 5 years, sometimes even over 80%. So this is something we like to see. They also have a great free cash flow growth as well. This is something really important to me. The balance sheet is also great. This means a low amount of debt and a good amount of cash on hand. The free cash flow yield around 2.18% is also quite decent, but only if we can consider that they grow the free cash flow in the future as well. In 2027, with our free cash flow assumptions, this number would be around 2.80%, which is also slightly better, and we like to see that. The enterprise valuation to free cash flow ratio around 44.38 is also quite decent, but again, only if they can continue to grow the free cash flow. In 2027, with our assumptions, the free cash flow ratio would be then around 34.52, which would be slightly better. What we don't like to see about this company is the cancelled contract with Novo Nordisk. So this is a big hit for them. I think it's around 15% of their revenue. So this can make the financials in the future look slightly worse. Overall, I think this is a very interesting stock right now. This company has a lot of potential, especially after the 33% drop, but there are also a lot of risk involved because the cancelled contract is a very negative sign for this company as well, and the financials not look extremely cheap. But overall, if this company can continue to grow the free cash flow and the revenue in a very high rate, I think this company could be fair valued or even undervalued right now. If you found this video helpful, don't forget to like and comment and subscribe for more content.